Good morning, everyone. Happy Friday. Welcome, welcome to the Trading Syndicate for Friday, September 5th. Hey, Nate. Lonigan, how you doing? Juan, RC, how are you? Hey, Mike. Okay. Made it through another week, indeed. No scars. So, folks, I should start with the longer term chart. So, we are creating new all-time highs every minute here in the overnight. Our overnight inventory is 100% long, which means every single trade has been above yesterday's close. Hey, P Hunter. So right now, hey Alexander, how you doing? Hi Moran. Hey Johnny, what's going on? After yesterday's surprise short squeeze, we have three separate short positions in yesterday's profile, in yesterday's distribution. When we took out that high, this one right here, we created number 4, and we're currently working on number 5. So those are the most recent short positions. Now, why is that important? Well, because if you are shorting, these are the areas that you can expect buying if we come down to them. Now, we have NFP today, and if we don't get any responsive selling, my upper target is going to be 65.47. That is the top of that's a big level here. That's a big level for us. The reason is because it enters the next zone. And the next zone, the top of that zone is 67.88. These zones are derived from the original COVID levels, which were 27.50 to 28.10, something like that, 5 years ago. And they've been working quite nicely for us. You just keep doubling them. So tough trading tonight because really shorting all-time highs in the overnight session is kind of a fool's game, unless you've got the capital to dedicate to it, because you really only want to hit those hit and run shorts, right? Position shorting is going to be difficult. I mean, unless you have the capital, and that's okay. So had you shorted, say you shorted 30 and a half, you know that there's going to be bids at 28, right? Um, we looked at, this was I was actually on the phone and we were talking about shorting, so we actually missed this look below and fail of 25 and 3/4. And you can just use the candles where if you see candles, the bottom of the candles, I wouldn't go long off of that, but if I was shorting, that's where I'd look to be covering. And that's where I'd have my buy orders in. Okay. That's how you use those candles for tactical information. Now we just have one single print left here. Let's see. Be nice if we get some decent inventory correction. We do have a poor high, so we have sellers competing there. See if we can break 65.28. That would be handy. This thing's a little out of control yesterday. I think also the expectation was, a lot of people were saying as soon as September starts, the market's going to sell off. And and here's the problem when people talk like that. It's not based on the chart. It's based on rhetoric. And it's based on, you could call it whatever you want, seasonality and all that stuff. But if the chart doesn't agree with you, you can't trade that way, right? The chart is the ultimate deciding factor. Whatever your conviction is, if the chart is not backing up your conviction, there's no point in just blowing up accounts and losing money. You know what I mean? I cannot imagine how many people are short over the last 3 days, especially down here, where we took out, where was it? Down here under 6,400, especially down here at 64.26. There are a ton of people short in that end, underneath that end period spike, which never got resolved. And we've just been adding fuel to the fire because they've just been averaging up and averaging up and averaging up on their short, which means the market just keeps going higher and higher and higher. The more people short a market that has no supply, the higher it's going to go. Nobody understands that because they think that short sellers have a lot of power. They don't. The people who hold supply at the lowest cost basis are the ones who have all the power, right? And it's a really hard lesson for people to learn, especially if you don't know anything about markets and you're just trading blindly. And that's what we try and teach people at the Trading Syndicate is that, your convictions are great, but they have to be grounded in reality. And, if your convictions are not grounded in reality, in business reality, then you're going to lose money when you're trading. You might get lucky every once in a while, but on balance, you are going to lose money. Hey, Jerry, how you doing? And now we are in 4 times cost basis. So you don't want to go and put on a lot of size long. It's okay to scalp long, that kind of thing. But you really want to make sure that your trades count. So when we are at all-time highs, just trade less, right? Trade less. Don't trade your ego. Don't trade your bills. Trade your setup and make it count. The overnight POC is 65.19. Yep, exactly right, Howard. How are you doing? Hey, we filled the single prints. Finally, a little bit of liquidation. Good, good, good. Get rid of that. Let's see where we find the bid. It's been a challenging week. I've talked to a lot of people. They're really frustrated. And I get it. Just bide your time. The markets will change again. You know, Trading all-time highs is the worst because the order flow is unpredictable. Because large traders are not going to come and put on size at these levels, right? Nobody's building a position at 65.28. Most of this is driven by short covering. Yesterday at the close, if you guys read back in the room, I told you guys that the price was going to spike higher in the last 10 minutes before it happened because I knew that there would be buy-ins, and true enough, they came in and there was a lot of buying in yesterday. Yeah. Sure, single prints, Mike, are okay. Great question. Do you see this level right here? That's the old all-time high. Okay? So when we took the old all-time high, anyone who was short was using that as a stop. That's where we blew out the stops and created these single prints. So when J period came down to that area, right, there's a bunch of unfilled bids sitting here from shorts trying to cover. That's why the market stopped there, turned, and rotated back up. Single prints to the upside are a short position. It's a lack of supply. Single prints to the downside are excess supply. Right. Yeah, it's three RTH sessions in a row has been markup, 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 low volume, markup, markup, markup. And what the agenda is, I don't know. But I just always will trust the chart. Well, we're at an all-time high right now, RC, at 65.31. The problem is I have no idea what's going to happen 6 hours from now. I've never been one of those predictive traders. Here's what I know. What I know is if we were to open here right now, we'd be opening on a gap, which means something has changed. I don't know if you guys know what a material change is, but when there's a material change in business, you get a gap up or down, right? So that's one thing. Number two is, as TradeMaker says, right, rollover, right? You know, we are going to be rolling over what, is it 10 days or 2 weeks or something like that? So a lot of people who are short are trying to cover before the contract rolls over. Because if you look at the new contract, right, the new contract is already trading at 65.83, right? So, I mean, it's only traded 500 contracts, but look at the price. It's 60 points higher. So, yeah, it's not, you know, those are all those contributing factors to this move higher. Whether it's going to push to all-time highs in RTH, it could. I mean, there's no overhang. If we open above yesterday's high, if we open above 65.23, definitely you'll automatically print a new all-time high, right? This is an all-time high made in the overnight. Market profile people don't, and the way I've learned is that size traders don't think of an all-time high in the overnight as a true all-time high. They say it has to be made during RTH, right? So, there's nothing underneath above us, sorry, right? So, the way you look at it is nobody owns the ES at 65.80. Nobody owns the ES at 65.50. So up here, there's no overhanging supply. That's why price can be marked up as high as it wants. Everybody will say, oh, it can't be this high. It's too high. It should go lower. That's great. That's wonderful. But what is the chart telling you? Right? Don't ever fight the chart. Because the chart's the actual transactions that are occurring in the market. When you start fighting the chart, well, just bad things happen, right? The chart is trying to tell you, right, what kind of business is taking place. So if you start second guessing the chart, you're starting to second guess the actual transactions that are happening. That's why all those traders who look at order books and stuff like that, not many of them are actually profitable because order books are expressions of interest. They're not actual transactions, right? The tape never lies, right? One guy buys, one guy sells, and that transaction is recorded, right? It is shown on the time and sales, and it's also shown on the chart, right? The chart is just a visual way of keeping track of business transactions. So if the chart is telling you that no one has to sell this thing under 65.20, why would you be shorting it? Right? You need to identify a seller before you short, right? And I know I'm talking about this at all-time highs, and everybody goes, well, JJ, why are you talking about shorting? Shouldn't you be telling everybody to go long, blah, blah, blah? Well, it's because people miss the long, so they automatically think that they should short it. But they don't have a business reason to short it. That's why I address those people. So if they are shorting, right? So if you're short right now off of the 30s down to 27, that's not a bad short. That's what we call shorting the backfill, right? Take a look. Right? So you're shorting the backfill. The backfill is the backside of this move, right? So front side, backside. So short, stop, and then you're looking for bids around here, right? So put some buy orders in here, and if you don't get filled, cover. It's not rocket science, right? I'm not saying don't short, but at all-time highs, hit and run shorts are better. Now, I'm talking really to the retail trader crowd. If you're trading $100 million, $20 million, if you got big accounts, right, and you're shorting this thing and you can be offside 50 grand, 100 grand, be my guest, right? You know, in the immortal words of Cat Williams, make your paper, boo-boo. But if you're a retail trader, have some humility and short the backfill. And when the seller goes away, get out, right? As soon as you see those offers lift, right? As soon as you see the offer starting to move higher, it means the market has seen buyers and you don't want to be short, right? Heat maps, DOMs, what's that other thing? All that snake oil that they try and sell traders to make them think that they have an edge. Yeah, order flow, the biggest scam out there. Order flow trading software is the biggest scam out there. All a 1 minute chart is order flow software, right? But they got to sell something to you, right? Marketing, the great marketing machine, right? I like good marketing. What I don't like is charging people thousands of dollars for software that they don't need, right? A simple 1 minute chart is all you need. And a little bit of common sense. Right. See, Mike, what the difference is transacted volume versus untransacted volume, if you know what I mean. When you go and put an order in an order book, say I put in an order to buy 100 contracts, right here at 65.25. That is not transacted volume. That is an expression of interest. If that trades and I buy 100 contracts at 65.25, then that is an actual transaction. The transactions are on the chart. If you look at a DOM, that's not transacted volume. And no large trader, unless they're high on cocaine, is going to show you what they want to do on a DOM, because everybody would front run them and they'd pick their bones clean. Overhanging supply more or less trapped longs. Exactly. That's all it is. Overhanging supply is exactly trapped longs. Simple. It's just a fancy way of saying trapped longs. Right? Old stock people will call it overhang. They'll go, oh, there's overhang at this level. That's all it means. So the way that would work was, say Mother Truck, I paid you, right? You say, hey JJ, look, I can bring in, uh, you know, say I've got a stock, it's at $5, and you tell me, listen, I can bring in 1,000,000 shares of buying, right? And I'll charge you 200,000 shares to bring in 1,000,000. Oh, that's not bad, right? So what I'll do is I'll give you 200,000 shares. You'll bring in 1,000,000 shares of buying, and I'll sell, those 1,000,000 shares between 5 and let's say 7, right? Now, if your buyers are longer term, they'll hold. But if they're flippers, they're going to flip out, and the stock's going to go back down to 4, and then maybe 3. So as soon as it breaks that $5 level, I've got 1,000,000 shares of overhang to clean up. See what I mean? So what I'll try and do is I'll flush that 1,000,000 shares down at 3, buy it back at 3 because I sold it between 5 and 7. I'm going to buy it back at 3, and then when I get back over 5, it'll go to 5 to 8 like a hot knife through butter because I've cleaned out the overhang. No problem. Right? So I judge a stock promoter or a deal guy on I'll pay you, I'll pay you 100 grand to bring in $500,000 worth of buying, right? Exactly, Mike. That's when the chasers, right, come and push it to 8. Hey, AZS, right? Because unless a stock's got a Wall Street following, you have to pay people to buy it, or you have to pay people to come in and tell other people to buy the stock. That's called promotion, right? Touting, promotion, all that sort of thing. So we got bids here at 26 quarter half. Not the greatest trading environment tonight. There you go, Alexander. Exactly. No problem. Yeah, I probably shouldn't be telling people these things, but what the heck, right? You know, that's why I always try and discourage people from investing in penny stocks because, You're buying something at say $3 or $5 or even 30 cents that someone owns at nothing or almost next to nothing, like 0.001 cent. That's why I like trading futures, because in a futures market that there's nobody who owns the futures for free, right? Whereas in the penny stock world, I've got free stock and I'm selling it. This is really not the best trading environment tonight, folks. See what happens when London opens. Maybe they can give us a push. Hey, Raj, how you doing? Yeah, exactly, Johnny, right? Like, I'm the one who trades for the finance guys, right? Friday Globex is often quite slow. Yeah, it might be a. Let's see if London can get down to 24. It was a short week, but boy, it felt longer, didn't it? It's kind of hard to get them going after those 3-day weekends. Here we go. Someone willing to sell under 26 half. Oh, that only lasted for a second. Does anybody have any questions while we're waiting for this thing to try and drip lower? Oh, here we go, London. Let's see if London can take out 26. Come on. Here we go. Come on. Yeah, see, right now, London couldn't take out that stop. Right? That's the stop here. So you don't have to have market profile. You can use a half-hour candle chart. Just to mark the lows. Yeah, selling just shut off. Why is that, Howard? Because the market got down to that 26 area, right? The algo software sensed the bids, moved the offer up. Not very tradable tonight, folks. We are distributing, Omen. That's what we're doing now. Now, if we run out of buyers, what are we going to do? What's going on right now, Omen? We got to put it on sale. We ran out of buyers at 26, so it's finally, now we're going to be looking for 24 and a quarter. Right? So anyone who's short 28, 29 against that 31, you'd be putting some buy orders down here, see if you can cover a little bit. Right? The ultimate target's going to be 22. Let's see if we can fill those single prints from 23 to 24 quarter. Getting close. Nice work, AZS. Nice trade. There we go. There's 24 quarter. Beautiful. Nice. Nice trade. Hey, kind of see how it's slowing down here at 24? Right? It's hitting those bids. Now let's see if we can fill these single prints. This is good. This is healthy. This liquidation is healthy. Markets need to have a seller. Right? And we saw that seller here and here. So you identified that seller at 28. You put your stop there. Beautiful. See how it's slowly filling those single prints? It's slowly filling those bids. There we go. It's just one left. And that's right at that old all-time high. It's okay, man. There's always the next trade, right? Like that old Italian client of mine used to say, don't be greedy. A million here, a million there, it adds up. Right? 2 points here, 3 points there. Just keep doing it. Just keep doing it. It's beautiful. It adds up. Yeah, market's going to be there tomorrow, right? And the thing is, here's the thing. You're making money on a Friday night when most people aren't, right? Well done, Johnny, And Johnny, I mean, you just moved to a new country, so, take your time, get, you know, get back into the flow. I'm sure it's probably been moving stressful, right? The levels are working good. We stopped right at 23. Yeah. Yeah, once you get kind of situated and stuff like that. I don't know how the algos are programmed, Seiko, and the good thing is it doesn't really matter. All that we have to know is that they'll find the bid. So when they find the bid, they stop selling and lift the offer, right? So we don't have to care about ratios or any of that stuff, right? Think about it this way, right? Think about it like this. The market will come down to an area, and when it sees buy orders, it will lift the offer and try and get those buy orders to chase price higher. Just the way human beings used to do it in the old days. Does that make sense? All the algos do is they make the process much more efficient than when humans were trading. How they are exactly programmed and the intricacies of it and the details of it, I am not a software guy, so I have no clue. All I know is if the offer is moving lower, right, sellers are competing, right? If the offer is moving higher, sellers don't need to compete. Simple commerce, right? So if I'm short and that offer is moving lower and lower, then I know that sellers are competing and we're going to come probably down to like 65.19. Does that make sense? So you don't have to worry about the algos trading against excess longs versus shorts or ratios. You don't have to fill your head with any of that stuff. That'll help keep your head clear so you can execute, right? Simplicity is the best way to run this business. That was nice. That was a nice inventory correction. I was looking for 19, Johnny. Well, first we got to get past the goalie at 20 and a quarter. Okay. Now I got some faith. I love a liquidation. And I'm not trading right now. I got as soon as this Zoom is over or this call is over, I got to run out. I got an appointment, so got some responsive bids here. So now we'll let it settle out. Wait for the next trade. We came right back to cost basis. The cost basis of the overnight, Johnny, is around that 65.19. So we stopped short just at 20 half. Now the shorts will start covering, right? What time did I draw the cost basis? I was up at, I slept in today, so I woke up at 6. So I drew the cost basis around 6:05. Usually I'm up at 4:35 in the morning. Last night I was hanging out with the young kids in the building and stayed up a little too late. So, and by kids I mean 30-year-olds. Exactly. That's exactly how commerce works, right, Mike? Cost basis is how much they paid for it. They take it and sell it up in the 28s, 29s, and 30s, and then when they put it on sale, they come back down. Did I see 28 and a half as a look above and fail? I did not. Now, Moran, you've been trading from the middle and edges, so that's okay, right? You're good at that. I am a little slow this morning, Moran. That's why I'm not trading. I got a doctor's appointment right after this that I got to run to, so that's kind of on my mind. So I'm preoccupied and I woke up late. So I'm not really on my A game this morning. So I will miss a lot of trades. That's why I'm not trading. Now, the look above and fail of that 28.5, that's valid for you because you've been trading quite well and you're dialed in, right? But I didn't see it, in all honesty. I'll never lie to you guys. If I'm not on the ball and if I'm not dialed in, I'll call out levels and stuff like that, but I won't trade, right? Or I'll miss stuff, right? Like you've been with me for years. You kind of should know by now that when I'm dialed in and I'm on the ball or when I'm kind of, my discipline is a little lacking, you know, which is the case this morning. Like, for example, right, you like to trade in the middle of the zones and you've gotten pretty good at it. So, if you were looking for a long off of the 23s, you'd probably put your stop down here at 22, and there's going to be sellers. You notice, like, I don't even have VWAP marked off this morning. I don't have the sellers marked off, right? So you can tell that JJ's a little bit on the lazy side this morning, you know? Like, I should have all the sellers marked off. I should have my VWAP on here. I don't even know where VWAP is, right? 21 quarter, thank you. Any other questions? I promise I'll be a bit more on the ball in our next session. Oh, cool. I don't look at volume, mother truck. The simplest thing for me, mother truck. You see this red line here, right? See this red line? That's the offer, right? So when I see the offer moving up, I know there are buyers. When I see the offer moving down, I know that the sellers are competing and to try and capture the buying, right? Because in any given market at a certain level, there'll be tons of people selling at that level. Okay? Now, if they see buying, they will all collectively lift price. But if they see that the customers are leaving, they will lower price to try and capture that buying because they got to turn that inventory into cash because they acquired that inventory here, so they're going to sell it down to their cost basis. Thanks, Mike. So guys who are looking, if you guys, my one-on-one guys, if you're listening, because I'm getting messages like crazy, if any of you guys are listening, I will be out for the morning. I'll be around in the afternoon for one-on-ones. Okay? Stacking of the DOM is something that you should not be looking at, Mike. Remember how I said the DOM is an order book? So, Mike, let me show you, right? We've got some time. Let me show you what I'm talking about, okay? The DOM is an order book. Some people will call it, like in equities, it's a level 2, right? Same thing, okay? So let me show you let me show you what I'm talking about. This is one of my deals, okay? Now, on this particular deal, right? Every single market maker you see here is me. I control the order flow on every single market maker because we control the supply. Okay? Here, I have one of my buddies showing a bid for 100,000 shares at $4.30. You guys think that he's a big buyer. What he's doing, he's pushing people into that 432 offer. I'm offered here, 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 because I own all the stock, right? So people who will look at an order book will go, oh my God, there's a big buyer at 430. Let's buy some at 432. I'm using that bid to push people into my sell orders. Does that make sense? So all that pulling and stacking stuff is all, excuse my language, bullshit. I am manipulating the order book so you guys, I can sucker people into buying. Every single one of those market makers knows that I have supply in the stock and I am their call, right? Exactly. So every single market maker responds to me. How relevant is increasing volume near the edge of a cost basis? It can be interpreted, Seiko, as good accumulation, but I wouldn't worry about all these details, right? Just watch the candle chart. Now, some people don't like simplicity, right? The less you need to look at, the better, right? So all of that stuff that you're asking, I understand why you're asking it, but it's not worth your time, right? Your time is valuable, right? You want to manage your time so you what? What's the point of managing your time? Right? What's the point of managing your time intelligently? So you can focus on execution, right? So you want to have the least amount of crap in your head when you're like, trading is like a street fight. So you don't want to be thinking about Pythagorean theorem when you're getting punched in the face. Does that make sense? You want to learn how to react and when to react. The best way to do that is watching a simple candle chart. Does that make sense? There's about a million things you can look at. Maybe one or two things are actually going to make you money. Because what you want to do is you want to have a trade setup that is repeatable, that is scalable in time and size, and that also manages your risk. Everything else, throw in the garbage can. Right? So this is like this entire order book is manipulated by me, right? Everything you see here is because I want you to see something, right? Because I have an agenda. So if you see big bids, big offers, if you see a big offer, it means I'm pushing the market down to try and flush out a seller maybe, right? No, it's good. I'm glad you're asking, Mike, right? Marketing is really, it's a beautiful thing. There you go. It's back to being quiet again. We'll see what happens when the next period opens up. Of course. They're always, Mike, in any society, they're going to try and sell you things that you really don't need, right? Do you really need a slinky? Right? Do you really need a riding lawnmower with a video screen on it? Do you really need to have an SUV with 4 TVs in it? Right? But if you're buying, I'll sell them. Right? The problem is people have trouble uh, trading because they're taught to be consumers. They're not taught to be vendors. Oh, a slinky, Moran? It's this toy that they used to sell kids in the old days. No problem, Sonny. Well, the thing is, that's a great question, Sonny. You should not grow a small account. What you should do is you should use that account for income, right? What you want to do is first start with a funded trader account, right? Like those prop accounts, get some discipline, work to getting payouts, and use other people's money when you're learning. Once you learn and you start trading your own money, what you want to do is say you have $5,000 in an account, right? Or $3,000 in an account, and you're trading your own money. If you make any money that week, get it the hell out of your account. So if you have say you have a $5,000 account and you make $500 or $800 that week, wire it out right away. Learn how to trade for income. Don't ever trade to grow a small account. Growing an account is a skill that you're not going to have for a while. So at first trade for income, right? See, it's good marketing, Moran. Right? Brokerage accounts are not meant to wire money into. They are meant to wire money out of. I have never wired money into a brokerage account except for my initial deposit. right? What we used to do is we'd put stock in the account, sell the account, and get a wire of cash. That's how the industry works. So you need to think like a seller. You need to think like smart money. Smart money takes money out of brokerage accounts. Never leave money in it because your ego will get a hold of it and bad things happen. You're like, oh, I made $1,000. Now I'm going to make $5,000. Now, and then it just gets, that's when you blow up your account. So first use the funded trader programs like our friends at Apex and those kind of firms, right? I'm not getting paid by them, just so you know. But use, use that, get profitable, get consistent, right? And, you know, and every time you make some dough, get it the hell out of the brokerage account. Every Thursday you should be wiring money out of your account. Every Thursday, every Friday. Whatever you made, get it the hell out of your account. So your ego cannot get its hands on it. Okay? Okay, folks, I'm off. Oh, I'll be back in about a couple hours. Depends on how long they make me wait. I'll let you guys know when I'm back. Thanks very much. If I don't see you at 9 o'clock, have a wonderful weekend. Come and join us at the Trading Syndicate. We will teach you how this business works so you can make intelligent, informed business decisions. Have a wonderful weekend if I don't see you. And the rest of you guys, I'll see at 9 a.m. Eastern Time. Thank you so much for being with me. Really appreciate you guys. Right? Remember, trading is all, the magic bullet, the holy grail in trading is hard work and discipline. It's all the boring stuff. It's not any software or anything like that. Right? It's the boring, when you feel like you're going to pull your hair out, work through that frustration. We'll get you to the other side. Thanks, everyone. Have a wonderful morning. See you in a bit.